For more of this morning's biggest movers, let's welcome in Jeff Pierce, Senior Manager Derivatives Trading at Charles Schwab. Jeff, happy Friday. Thanks for joining us. And you have more earnings movers for us. Broadcom, unlike Lululemon and Dell, is actually moving lower after earnings. It's off about 3.5%. Tell us why.
Yeah, a relatively good report on the numbers. I think the comparisons for Broadcom and some of the other big names out there are still kind of holding it back in terms of this report. But let's look at the numbers. Earnings per share came in at $10.45 versus the $10.42 expected. That was up 9% year over year. Revenue beat as well, $8.88 billion versus the $8.86 that was expected, up 5% year over year. We look at the semiconductor solution size, that was up 5% at $6.94 billion. Beating analyst or just under analyst expectations, of $6.97 billion. Infrastructure software sales also up 5% year over year. Analysts were expecting about $1.89 billion. That number came in at $1.94. Adjusted EBITDA rose 8% to $5.8 billion, and they generated about $4.6 billion in free cash flow. That's up about 7% year over year. On the outlook side of things, though, for Q4, revenue expected about $9.27 billion. That would be a 4% increase from last year, but really in line with expectations for analysts out there. They also said that they expect adjusted EBITDA at about 65% of projected revenue, which would be very similar to what we saw in this report.
There's that old adage, Jeff, that comparison is the thief of joy. Do you think we're seeing some red arrows? Because even though this actually came in largely better than expected, it just didn't surprise to the upside in the way that NVIDIA did?
Yeah, we're looking at a stock that's done very well over the last 12 months. AI is certainly tied to this name in a big way, but I think investors are still trying to figure out, what sort of effect we're going to see on the financial results from some of this AI growth. We know Broadcom has been compared to companies like NVIDIA, and that's a very tough comparison. Any company in the space trying to be compared to NVIDIA right now is struggling a little bit. They've said that they expect their AI revenue to continue to grow over the next year. I think expectations with investors are certainly that that's the case. We've got this VMware deal that is another aspect to the Broadcom story that investors have to pay attention to as well. We know the UK CMA had approved the deal. They're usually the tougher customer when it comes to regulators, so that's certainly a sign in the right direction. I think, again, this is a company that's up, I think, around 88% over the last 12 months coming into today. So pretty good record. Might see a little bit of profit taking, but also just seeing a little bit of a tough comparison to some of the other big names.
Yeah, and if investors are looking for a potential play on AI growth, chip sales rising 5%. I think you said infrastructure software sales only rose about 5%. Increases, but not nearly as impressive as some of the other numbers that we saw from competitor like NVIDIA. All right, let's move on to MongoDB. It's actually higher. Shares up about 6.5% following earnings. Break down that report for us.
Yeah, very different numbers in terms of year-over-year growth here. Earnings per share, 93 cents versus the 45 cents expected. That's up over 500% from the 23-cent loss we saw last year. Revenue beat as well, $423.6 million versus the $389.9 million that was expected. That's up 40% year-over-year. Subscription revenue up 40%, coming in at just over $409 million. Service revenue up 20%, coming in at $14.5 million. They also saw gross profit at about $318.5 million. On the outlook side, and I think this is the reaction we're seeing here today, Q3 earnings per share, 47 to 50 cents. Analysts were expecting just 25. Revenue, 400 to 404 million. Analysts were expecting just over 386 million. On the full year, they raised their guidance for earnings per share, $2.27 now to $2.35. Prior guidance was $1.42 to $1.56. Analysts were expecting just $1.55, and revenue $1.596 billion to $1.608 billion. That's up from their prior $1.52 to $1.54 billion. And of course, analysts were expecting just about $1.55 billion. So very impressive numbers on the outlook side, and I think that is investors buying into the stock today.
And it looks like some of those analysts that were surprised by these results are upping their price targets, because MongoDB is up about 108% year to date. So analysts have to start boosting up their expectations of how high this stock can go.
Yeah, we've seen Needham raise their price target to $445 from $430 today. Piper Sandler raised their price target to 425 from 400, along with others out there. A lot of buy ratings, a lot of overweight ratings across these different analysts out there. And the company commentary continues to stay well. They say they're seeing the efforts of some of their platforms out there across different channels. They also say that they're in the early stages of AI powering the next wave of their application development. So, again, another AI tied name. But in this case, we are definitely seeing some year-over-year growth that investors are buying into.
Yeah, the median price target for MongoDB now $440 a share, currently trading around $411.65. So more upside, according to the majority of Wall Street analysts. All right, let's switch to automakers. Tesla announced more price cuts today. Shares under pressure, down about 1.6%. Tell us what's getting cut.
Yeah, more price cuts coming in the U.S. This focused on the Model S and Model X. For the Model S dual motor vehicle, that's going to be down about 16.4%. Price is just under $75,000. The Plaid version, just under $90,000. Price is down about 17%. If we look at the Model X, the dual is price is being reduced by just under 19%. Price will be just under $80,000, and the Plaid version, that price is going to be reduced by just over 17%, coming in just under $90,000. These adjustments, of course, will keep the Model X eligible for those EV tax credits of about $7,500. The company is also lowering their subscription price for their self-driving car software to $12,000, $15,000. And if you've been following Tesla at all over the past year, these are not the first price cuts we've seen. In mid-August, they cut prices in China. They moved Model S and Model X down by 6.7 and 6.9% respectively. The Model Y and Model 3, they also dropped in the same week by about 4.5%. We've seen them offer insurance subsidies on some of these new Model 3 vehicles. So they're continuing to cut prices. We have investors certainly concerned about the margin part of it, but we've also seen some pretty decent sales numbers come out of it as well.
Yet in China, Tesla actually unveiled a revamped Model 3, so it could take some time before we see that here in the U.S., but that actually comes with a higher price tag, right? So really trying to go head-to-head with some of the competition with the revamp, but not a price cut there.
That's right. The new version, the price is up by about 12%, coming in at $36,000. This new model of the Model 3, it's expected to boost sales in that market, and they're hoping for it to. I'm certain that they're hoping for it to spread to other areas as well. This new overhaul is going to include a longer range, higher price, of course, but they expect it's going to go about 380 miles on one charge. That's up about 30 miles from their older version. So certainly some increase in mileage there and an increased price to come along with it. It's going to be interesting to see how that new model plays in China and whether or not we're going to see that come here and other places.
Okay. And then speaking of automakers, the labor strife continues with GM and Ford. Doesn't seem to be impacting shares today. GM up about 0.5%, Ford up a little bit more than that. But what's the latest there?
Yeah, we've got the United Auto Workers filing an unfair labor practice charge against GM and Stellantis for refusing to bargain in good faith. GM and Stellantis denied the unfair labor charges. The complaint did not include Ford, who recently did make an offer to the UAW. The offer is about 9% general wage increase over the life of a 4-year contract. The UAW president called Ford's proposal, concessionary. He said he criticized the proposal altogether. But the development, of course, both of these developments, I should say, come just 2 weeks before the labor agreements expire. The contracts for GM, Ford, Stellantis all expect to expire on September 14th. And expectations is that it potentially could see a strike of the UAW, who represents about 146,000 workers for these three companies.
Do you think a strike is likely at this point based on what you're hearing? Because based on shares, GM is higher on the week. Stellantis is lower today, down about 1.6%, but still higher on the week. What are you hearing?
Well, we're a couple weeks out here, and so I certainly think the pressure is starting to build, right? We've seen numbers from, different analysts out there. We know that, look at strikes in the past, they certainly have been expensive to these companies. It'll be interesting to see whether or not we start to see some of the other names, GM and Stellantis, really start to make offers and start to negotiate. And what's gonna happen there? I mean, I don't have an indication whether or not the UAW is serious about starting the strike if they don't reach it by the end of their contract. But everything points to the fact that they are, and we've got some serious numbers that go out. If you look at BofA Securities, they put out estimates a while back saying GM, estimates for weekly effect on a UN strike per automaker. They had GM at 770 million, about 46% of adjusted earnings. They had Ford at about 620 million, Stellantis 470 million. So some pretty big numbers there in terms of those effects. So I think we're certainly going to start to see these negotiations heat up over the next 2 weeks. Now, whether or not they get a deal on the table by then, that remains to be seen.
All right, we'll leave it there. Jeff Pierce, appreciate you chatting about all the movers with us this morning. Thanks so much.